Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Right. Well, let's move on to Coinbase. I'm gonna pull this up and we're gonna go through this live because I think this just came out in the last few minutes.
Yeah, I haven't looked at anything yet. I just pulled it up myself.
Here is their they do a good job going through the metrics here. Monthly transacting users, they were expecting this to be down from the second quarter, so 8.5 million right there. Transaction volume, this is where they end up making their money, is on volume on transactions. So that's down again. We're down about a little over 50% from a year ago.
Trading volume down. And so that is kind of a little bit surprising there when you think about it, because as we noted with Block, the Bitcoin revenue was fairly stable. And maybe there's something with that I'm missing off the top of my head. But yeah, the noting here, trading volume down about 50% year over year, thereabouts. And the assets on the platform, wow, that's a big drop from last year. But again, the value
up from
is
the second
down.
Quarter.
Yeah.
And this is going to be both the value of the assets that people have. Like if you had one Ethereum on Coinbase a year ago, that Ethereum is worth 60 or 70% less now. So yeah, that's gonna show up in their assets on the platform. Revenue, $576 million net loss. Net loss was down. I think that's encouraging. I think it was in the second quarter was when they announced the layoffs. They cut headcount by a pretty significant amount. I think it was 20%, and that will take a little while to push its way through the income statement. So the fact that net loss is coming down, I think, is a good sign for surviving this crypto winter, which is really all that Coinbase wants to do at this point.
Check out the subscription and services revenue.
Let's see,
211 million, up from 147 million in the second quarter.
And that, I believe, they did give guidance on that. I'm not remembering it off the top of my head, but that is a surprising jump to me.
Yeah, they said that their outlook here was modestly higher quarter over quarter. But let me pull this. I'm doing the math real quick here. Let's see what that actually is. Yeah, that's a 44% jump quarter over quarter. That is not modest.
And that's key. Quarter over quarter. This is not annualized growth. So that is pretty significant there.
And that's the bear case against Coinbase, right? Is that these transaction volumes are going to continue to fall and they're not going to have a business. Well, maybe they can have a business if they can develop a suite of products and services that they can sell on a subscription. And we're seeing, wow, that's actually starting to really take off.
Yeah, I want to come back to that, but I do want to highlight these two numbers here. Transaction expenses. So this is the expenses for their transaction business. They guided for low 20% range, which is about where they were in the second quarter, and it was at 18%. So that tells me that they got really aggressive in cutting costs, and it's already starting to make an impact on the income statement. So that's really good. Sales and marketing expense, 141 million last quarter, guided for approximately 100 million. Actuals was 76 million.
Wow.
This is one of the things I've written in articles on Fool.com about. Sometimes Brian Armstrong, it's like you can just read the transcript or listen to their conference call, and he has such clarity about what the business is, where it's going, and how they're going to get there. And it seemed to me when they made the cuts that they did, when they did, he was kind of like, hey, we've been through this before. Crypto is going into a, what we call crypto winter, and we got to get out ahead of it. We want to be survivors so that we can thrive when we get to the point we're at now. I'm looking at NFT marketplaces, and OpenSea is the only one that still has a transaction fee at this point. OpenSea is going to need to sell because they're not going to be making any money eventually.
Right.
Magic Eden's in the same boat. Who buys them? Well, Coinbase is kind of the only company with money right now. We've seen recent speculation that we don't know what FTX's balance sheet looks like, given the leverage that their trading arm, Alameda Research, has. So it's not exciting to say that you just want to survive if you're Coinbase and kind of keep slowly adding products that are going to eventually be, the search engine or the email that, Google built. But that's really what you want to do, is like survive and slowly build over time. And it's, this is surface level here, but I think they're really doing that. And their expense cutting is just incredibly impressive to me.
I don't want to jump too far here, but on page 7, this is the most eye-popping number here for me so far, and I can't believe I didn't think about it. They made over $100 million in interest income for the quarter.
Because they have something like $6 billion in cash on the balance sheet.
And I didn't even think of that scenario with the interest rates going up.
Yeah.
They're earning a better return on that, and all of a sudden, $100 million? Come on.
That's a lot. The other thing, this does not include much impact from Ethereum staking. That started in mid-September, but Coinbase is one of the biggest staking platforms. So basically, when a customer says, "Hey, I want to stake my Coinbase or stake my Ethereum on Coinbase," Coinbase says, "Okay, we'll do that for you. We'll do all the legwork. We're going to take 25% of that revenue, and then you can get 75% of that revenue as basically a yield on that staking."
Right.
So that is not playing a big role in their income statement yet, but I think it will. So I haven't been able to find those numbers yet, but that's another thing to kind of put a pin in, that, even if nothing else changes, the operation should get a little bit better from that alone.
Mm-hmm.
Yeah, that's a good point, John. That's something I hadn't thought about either. $100 million in interest income. Let's go back up to some of their transaction volume, because I think this is always interesting. Retail trading volume down a little less than 75% from a year ago to $26 billion. That's not real surprising, given the fact that retail traders have kind of exited the market in a lot of ways. Institutional holding up pretty well, though. They did sign the deal with BlackRock this most recent quarter, so they're going to be providing a lot of the infrastructure to banks and investment institutions who are trying to get their customers into crypto. So that's going to be, I think, a bigger piece of that business. It's not real high margin, but again, it's going to be sticky, and it's going to be really big numbers.
Right, and it is something that I would consider of a moat for Coinbase. Mm-hmm. There aren't many companies equipped to offer what Coinbase is offering to that class of person.
Yeah, that's 100% right. And there's security piece of it too. I think, every time I see them announce one of these deals, it just makes me more and more confident that they have the best security in the industry. Mm-hmm. And as we move forward in crypto, I think we're already seeing this now with something like the Reddit NFT launch, but everybody's going to be interacting with the blockchain in one way, shape, or form, and they're probably not even going to know that it's happening. If you saw that Reddit NFT, people were just buying a profile picture, paying for it with a credit card, and then it was in their vault. Well, that vault happens to be a crypto wallet. And so it was on the Polygon blockchain, and you could go sell it on OpenSea, but people didn't even know that's what they were getting. So I think that's going to become more and more common. And if you're a company who sees this as a potentially big revenue stream, or, in addition to your business model, who do you go to? I think Coinbase is a natural partner, whether you're using their cloud services or their, MPC wallet or what have you. So I do think that's where that subscription business, I'm going to have to dig into that more, and I'll listen to the conference call and probably write about that and cover it in the next few days. But I think that is going to be something really to look for over the next few years, is how many more of these institutional corporate customers who are coming to crypto with maybe less of a degen mindset and more of a, hey, we want to build a real business here, that we see cost savings, we see benefits to blockchain technology over having info in a database, whatever their angle is, they're going to be looking for companies to kind of do the stuff they don't know how to do. It's like AWS, you know, hey, we don't want to build our own servers. Like, we don't want to have a server farm. You know, Snap was built on that. Like, cool, you'll do all that stuff for us. Great. We'll just pay you for what we use. That's going to be, I think, the case with the blockchain as well. A lot of companies are going to be really interested in this, and they're just going to go, hey, there's a whole bunch of stuff we don't want to do. Let's do the thing we do well. You do the thing you do well, and we'll pay you for it. So I think that's the way to look at Coinbase.
Yeah. Here's my hot take here. I don't own Coinbase, even though I have followed this a lot. There was a point, I don't remember where it was, that I finally said, you know what, this might be worth a small position, because I think that it is, if crypto succeeds as a space, I think that Coinbase is a necessary winner. Mm-hmm. But I still haven't owned it personally. And I'm looking at this report and I'm thinking to myself, I think that we're really near a bottom in terms of the crypto bear market. Not to say that it won't go on for a while longer, but I think that in terms of the destruction that has happened, I think we're near the bottom in that. And looking at this report from Coinbase, I am saying, wow, this is actually pretty good numbers considering the time that we're in. Is this a buy heading into the next bull cycle of the crypto market?
And their results are their upside is so asymmetric too.
Yeah.
I think that's the other thing that is difficult to wrap your head around, is when you get into something like the blockchain, you build this infrastructure layer, this protocol layer, and then it's just there and you just generate revenue off of it. And this is a company that could really be kind of living off of what they're building right now for the next decade. And I think that's always something, you know, disruption is always easy to see in hindsight, but I think that disruption is happening today in the crypto markets. And one of the things that I'm just going to be blunt in saying it, Coinbase is like the adults in the room. You know, they're not saying, hey, we're going to add a bunch of derivatives contracts that you can trade. You know, great. Or, you know, here's some arbitrage opportunity that we made a bunch of money off of. They're saying, here's this real infrastructure thing that we built. You know, I keep going back to the MPC wallet. Like, people who have the Coinbase app probably don't even know that they have a wallet that will work on multiple blockchains just on their app. It's just sitting on their app. And that's something that Coinbase shares that security with you. So they're abstracting away these complicated security features. That's incredibly valuable for the future of the blockchain. You know, it's like making email easier or writing a web page easier. The companies that did those kind of things made you know, a lot of money over time. So I think that's kind of where we're at. Anything else that popped out here? I'm gonna dive through a couple more of these. I did want to show the cash walk. So I'm gonna pull that up because I think this is a company that, again, we're talking about building for the future, but you got to survive the today. And so this is their Q2 to Q3 cash changes. $6.2 billion in cash at the end of last quarter. They had an operating cash flow loss, some minor changes in M&A investments, CapEx, things like that. Net equity transactions and another $140 million. But you're $5.6 billion in cash on the balance sheet, even after this recent loss. So that's a lot of money, especially when their cost trajectory is coming down. You know, this is enough to make it through a few years if this crypto winter lasts. So I think that is another thing to keep in mind if you're looking at this company.
I think that one potential out of nowhere thing could be their Goodwill. So I'm seeing over $1 billion of Goodwill on the balance sheet right now, up about 400 million from last year. So,
and Goodwill would be from acquisitions that they've made that, like, let's say a company has $10 million of assets on the balance sheet, but you pay $100 million for them. You put $90 million of Goodwill on the balance sheet, because you're saying, hey, there's value here that isn't just cash on the balance sheet, and that becomes Goodwill. And then what oftentimes happen is companies will write that off in kind of bad times, and they'll often have like a really bad quarter where they'll just go, we're going to write a whole bunch of stuff off.
Rip off the Band-Aid. I like that approach. Get it out of there, and we don't have to worry about it going forward.
Well, and the other thing that I will look at here over the next couple of days is their venture arm is another really interesting piece of the business that doesn't get a lot of value from investors, because they're putting money in, seed, Series A, Series B kind of companies. But if any of those companies hit, that can be suddenly a big chunk of money that comes to Coinbase. So it's another point of leverage long term. Again, I think Coinbase is the kind of company that if you think the blockchain, crypto, Web3 is a big piece of the future, then Coinbase is, I think, one of the best ways to play that. If you don't, then stay out of it. It's I think that's simple. But, as we've been talking for almost a year now about crypto, I think this is one of the companies that is building really interesting things that are going to be probably behind the scenes to a lot of people. Maybe trading isn't the future of their profit, but they're kind of the AWS where you go, everybody's using Coinbase products, they just don't know it.
Yep.
All right, now it's time to look at what the market thought. Coinbase down 8% during trading today, up 4% after hours. Not a big reaction. Near their low at 55.
Yeah.
It's been lower. So, I guess it's been in the 40s. So what do you think? What do you think, John? Is this the kind of company that you're intrigued by, given the asymmetric potential return of this investment? Or are you still going, hey, you got to prove it to me?
I think that Coinbase has proved it to me. I think that the crypto space still has stuff to prove to me.
Well, you're questioning the macro more than the Coinbase specific.
I'm with you. I think that this company is in many ways the adults in the room. I know that there has been criticism of the management team for a lot of things. Some of it very well founded, and other things I think that are a little bit blown out of proportion. But overall, I do think that this is the adult in the room. I think that this is an investable company in that sense, because they are real adults. I do question the space, but man, this is interesting what they have built so far, and especially how they have managed during what you should expect from a cryptocurrency company periodically, right? Going back 10 years now, this has been a cycle up and down. And if this is how they are in the down cycle, it could get worse, but let's assume that we are there at the trough of the bear market. If this is how they are right now, I feel really good about the next bull run.
The other thing that's new in this crypto winter into potential next bull run is a lot more corporations are really interested in figuring out this space. And I think that's going to be the big difference. Is it's not going to be the Bored Ape Yacht Club, going up 1,000x. That's going to be the thing in the next crypto cycle. It's going to be, what are we actually doing with this that's meaningful and valuable? Yeah. And I think
it's Coinbase is going to be Starbucks launching an NFT loyalty program. It's going to be, like you said, BlackRock working with millionaires to diversify their assets. It's going to be all of those kinds of things.
The Reddit NFT, 3 million new wallets in like 6 days. Yeah. We don't even know exactly what this is going to be in the future, but I do think there's going to be this infrastructure layer that's going to be very, very needed and Coinbase is one of the leaders in that infrastructure layer. So even if you put away their transaction business, I think you pointed it out. The subscription growth is incredible on a quarter-over-quarter basis, over 40%, and now they're generating a ton of money just on the cash that's sitting on the balance sheet too. So
so they're counting that cash on, they're counting that interest income in the subscription number that we looked at the beginning of our talk.
Oh, are they?
Yeah. So, which is kind of surprising. Yeah. So if you just look at custodial fee revenue, that's broken out. That's down on a year-over-year basis. Other subscription and services revenue is up on a year-over-year basis and up very sharply quarterly or quarter-over-quarter as well. But the big driver, that 211 million number, which was up 46% or whatever we noted earlier, the big driver there is the tripling quarter-over-quarter of the interest income.
I'm going to pull this
and the 13x.
Pull this table up here so that we can show all the numbers. Yeah, so blockchain rewards. This is where staking is, right? Is blockchain? Yeah, so this is a number I think will go up pretty significantly next quarter when Ethereum staking is a bigger piece. But okay, yep, interest income. I see what you're saying right there.
Yeah, it's up 13x year over year. That's incredible. I had not considered that. So that's something to look at. Cash-rich companies right now. I mean, we just raised another 0.75% yesterday. Cash-rich companies all of a sudden saying, thank you very much.
Yeah, that's very true. All right. Well, I think we both kind of have a similar takeaway here. The stock is becoming, I think, attractive. The downside is not nearly as big as it was when the company went public a little over a year ago. Mm-hmm. And the upside is still pretty tremendous, I think. But again, it's a little bit like the analogy I always use is it's like Google's identity solutions, the sign in with Google, a bank, and AWS is kind of what they're doing in this crypto and Web3 space. And with especially AWS and Google, when they were building those businesses, you couldn't point to, here's the thing that they're going to be in 10 years. Because nobody knew where it was going. Nobody knew exactly what the products and services the market was going to demand, what you could do from a technology standpoint. So that's the other thing that's, I think, really interesting here is you could look at the numbers all day. You could build models all day if you want. You just have to trust that management and the people that are working there know what the market is going to need and they're going to build the right things. I think that they've done that over the last 3 or 4 months with what they've introduced. And so that's what I'm going to continue to look at is are they building really valuable infrastructure things that abstract away the fact that people are even interacting with crypto or the blockchain. But it's kind of where my head's at. So I'm staying in. I'm maybe not buying more now, but we'll see. We'll see where we end up. So update us if you decide to join the Coinbase shareholder club. Yeah,
definitely. Yeah, I'm glad that we talked about this because I hadn't looked at Coinbase in a little bit.
Yeah, well, interesting quarter. We will take a little bit more time to digest this. You know, as the name says, this is our instant reaction. So there's oftentimes a lot that we hear in conference calls or context that comes out that is maybe clarifying. So, but I think overall, I think the Coinbase numbers were pretty good.